All right. Welcome back to another episode of Profit Playbook. I am Matt, and today we are with a special guest by the name of Mack. Thanks, dude, so much for being here. If you guys don't know, Mack and I are actually good boys, good friends, so it's an absolute pleasure to have you here, man.
Yeah, it's an awesome pleasure to be here, man. It's I haven't done anything like this, so I'm super excited. And yeah, Matt and I, we've been friends for a while now. We actually live in the same building, so if he's not too careful, I might sneak down there and give him...
Yeah, I'd love that, man. That would be hilarious. We should have just done that instead of having two different cameras. But yeah, so I guess like a great way to start off would just be like, tell us kind of like the story of how you got into trading and where you started and also how your strategy has kind of changed from where it initially began until where it is right now.
Yeah, no problem. So how I started trading is actually like a really crazy story. Just a little backstory. I used to play Xbox all the time. Years ago, I would play it all the time, and I had this one buddy I would play with. And then I probably went like about 4 years without turning on the Xbox at all. And then out of nowhere, I got this urge to play Xbox. And when I jumped on, my buddy invited me to an Xbox Live party. And in there, we were kind of talking and asking what each other's been up to. And he said, I trade Forex. And I'm like, I had no clue what that was. And then sure enough, he's like, here, let me send you some free courses on it and stuff. And then from that moment on, I just went full blown. I saw the potential. You know, I'm sure like a lot of you and a lot of you guys watching this, you opened up the demo account, placed some trades, and you're like, oh my God, I can make this amount of money in this amount of time. And, you know, it was great because I didn't see any of like the guru stuff. I didn't see any of the people flashing Lambos or anything. I just saw with my own eyes what I could make on the MetaTrader app. And then from there, I just learned it and I dedicated, you know, the next 4 years of my life to it. And here I am now. But in terms of strategy, you know, when I first started out, I think like most of us, support resistance, that's what I got into first. And I did find some success with that. And then I stumbled across smart money concepts. And then I traded SMC for about like 2 years before I even knew who ICT was, which is pretty crazy. I saw SMC first and then him. And then I met Matt right here, and Matt, you know, ICT King over here, he helped me with some ICT concepts like fair value gaps and stuff that I literally wasn't using at all. I was a pretty basic SMC trader in the sense that, you know, 1 minute break of structure, order block like that, no concept of liquidity or anything like that. So that helped me a ton. And then I've been trading that kind of style for the last year and a half. And then recently I have fully switched to swing trading. And I love it. I love it so much because I just wanted to be on the charts less. And I use the high time frame analysis for everything. So I just figured, why don't I just enter on these high time frame areas instead of waiting for confirmation? And it's been great so far. You know, as a New York trader, one thing that kind of sucks is there's so much news. And with these funding challenges and even trading my personal account, I don't want to be in a trade at this high impact news from an intraday level. So a lot of my trades were missing me. The forecast would work out perfectly, and then at news, it would just dump. And I'm sure you've dealt with this before as well. So cool thing about swing trading now is I don't care about that because I got room. And yeah, man, sorry for rambling on.
No, I love it. I love it, man. That's awesome. And it's cool to see the transition from where you started and like when we met and then going from there and then now where you're at. You know, it's just so cool to see the progression. And I find that it's like a common thing to see people going from, you know, trying to work the lower time frame or lower time frames to trade and then kind of gravitating to the higher time frame because it's more reliable and more, I don't know, man, it's easier. It seems. It just seems like you can take a kind of a breath or relax. You're not like just trying to, you know, watch every single 1 minute price movement and go crazy. So, yeah, man, it's cool that you did switch to that. And it's awesome because again, like even for myself, I mean, I'm not trading, you know, super high time frame, but at the same time, I'm also not on the 1 minute, you know, like I'm waiting for a nice, you know, 15 minute, 1 minute or 1 hour and in 5 minute, like that kind of grouping. And I find it's just, I wish I did that earlier, you know, as opposed to.
So do I, man. But I think it's because for myself anyway, you know, I fell victim to those people on social media that were posting like the 1 to 400s. And I think we all know who those guys are without really saying it. But that, you know, because I saw that and that was kind of worshipped, I knew I could accomplish that on the M1. Not those risk rewards, but
no, I know what you mean.
It was programmed in, you know, M1 and it took me a while to drop it. And if you're watching this video and you have a successful M1 strategy, that's completely fine. Like I'm not trying to bash it, but for me personally, I got to the next level in my trading for sure within this last year from removing it. Just me personally.
No, 100%, dude. And I would I would 1,000% agree with that, and I would say that if you are struggling with the 1 minute, like just drop it. It's not necessary, and that doesn't mean that you can't do super well with it. Like I know guys that are doing incredibly well with 1 minute in higher risk to reward trades. It's just it ultimately depends on yourself and what your capabilities are and what your strengths and weaknesses are. And like for me, it's very difficult on the 1 minute to be constantly there. Like I would much prefer to give some time to think about my decisions first and like understand a clear invalidation. And if it gets there, then I'm done and it's set. I'm not like, oh, a 1 minute shift and then I'm back to thinking, is it back to, back in the direction, and then you take multiple losses. Yeah.
There's like no room for error too. Like when you think about how precise we're trying to be with price with those M1 entries, like it is pretty wild to think. That's why for me personally with swing trading now, I just feel way more confident in my setups because over the span of this 4 years and obsessing over, the markets, I have a pretty good understanding of where the market's going to go on the high time frame. So one of the most frustrating things for me, I'm sure you can relate to this too when you were trading the M1, is being right about the high time frame direction for that week, but then you get stopped out by 5-10 pips and then the market goes and moves 100 pips and your whole weekly analysis was correct. But because we were trying to get that precise entry, you get swept out intraday and then you're sitting there like, it's almost like the fallacy of, oh, I lost, but oh, my analysis is right. And I fell into the trap of, oh, my analysis is right. And rather than like, okay, where's the numbers? Like that's cool. My analysis is right. But like I lost this week. You know what I mean? Like what can I do to be better and have the data show that I'm having a great week rather than, oh, the analysis is great. Because don't get me wrong, that's amazing having that part, but it's easy to fall into the trap of just kind of sticking with that as your main driver of if you had a great week and not focusing on, okay, what I could have done better. You know what I mean?
Dude, 1,000%. And it's so funny because that actually happens all the time where it's like, yeah, my analysis was right, but my account is down. And at the end of the day, what are you trying to do as a trader? It's not about being right or wrong. It's about making money. And if you're not making money, like you should try and figure out why that is and then adjust to make sure that you are capitalizing on it. Because again, it's one thing, you can be an analyst and you can be a killer analyst. And I would say that, just from trading with you and working with you for like, however long it's been and being your buddy, like we've been through, we've seen it, when you were live trading together and all of the issues that we've encountered, all the times that we were like, dude, we were right every single time almost. It's just we got stopped out or we just missed, an opportunity here and opportunity there. And it's like, damn, that's not, it doesn't matter at the end of the day. What matters is if you made money and if you 100% can continue to make money. And that's 100%. What should be focused on, regardless of what that entails.
With that comes having a simple strategy, like I see these people where, they need to solve for X, Y, and Z and the Da Vinci Code before they enter a trade. Where you see these guys, how many times do we see people, on FTMO payouts or whatever that have the crazy payouts and they've been the most consistent. And then when they go show your strategy, you're like, what the heck? It's just this, and it's simple at the end of the day, and a lot of the time it's high time frame stuff, Totally. So it's crazy because the simpler, the better, in my opinion. And again, just to tie into how I'm kind of trading now, that's what I wanted. I wanted to be able to sit back, it's here. And for a bit there, my strategy still worked. Like I didn't switch because it wasn't working. I just had a realization that I think I could come to the same results or more with less work and be more efficient with my time. And that's kind of what led me to how I'm trading now. But the moral of this little rant here is try and keep your trading strategy as simple as possible. And if you do have something, where it's a massive checklist, maybe see if you can backtest on this wonderful platform here and refine it to where you don't have 16 things to check off. There's maybe only a couple, then you're in that trade.
Yeah, dude. And I think there's something really valuable that you just said there. And it's essentially like the understanding of the market has to be there. And that in itself is very complex, right? The market in itself is very, very complex. But that doesn't necessarily mean that your strategy and the way that you navigate it has to be. Although, yes, you should. That's why it takes years, right? Because you spend the time understanding the complexities. That doesn't necessarily mean your strategy has to be complex. It can actually be quite simple. And again, a lot of the guys that I know, and even for myself now, my strategy is incredibly easy. And it's like that has been, or that's the case because it's been refined over time and understanding that, like there's a minimum effective dose. Like I can put in X amount of effort. So say like 1 hour of effort and get the result of 10x, right? Or I can put in 2 times the effort and get the same 10x, where it's like, okay, well, the whole purpose the whole goal should be to put in as little amount of effort as possible, yet getting the same results. That's I think the ideal scenario, right? Is be as efficient as possible.
I agree to that 100%. You nailed that.
Yeah. And I
think 100 head to head on that for sure.
Yeah, no, absolutely, man. And it being on that 1 minute and the lower time frames can sometimes feel like I'm working extra for no reason, And so, yeah, I don't know. I think that's a great way to kind of segue into your strategy and kind of going through what do you use as your plan and how do you kind of navigate and enter into position. So if you don't mind, I'll share the screen and maybe we can dive in.
Yeah, sounds good, buddy.
Awesome. Yeah. So.
All right. So this is me here.
Yes, sir.
All right, guys. So I'm just going to jump to the daily time frame here for a sec, just while I explain kind of my strategy. So am I still on the webcam? Can you see me?
Yeah. You're all good.
Okay. So my strategy now, I'm using the high time frame for my bias. So I'm using the weekly time frame and then the daily time frame to kind of dictate where I think the market's going to go. And then I use the 4-hour time frame to enter. I am still playing between using the 4-hour and the daily for entries, but I find the 4-hour gives me that little bit of extra confirmation. And the cool thing about my strategy now is it's pretty much the exact same as I was using on the lower time frames, just without the confirmation. So before I would look to enter on a high time frame point of interest, so whether that be a 4-hour POI or maybe a daily, and then I would usually wait for confirmation with the 15-minute or the 5-minute or the 1-minute. Now I'm just using that supply or demand zone. That's another thing that I use, order blocks, whatever you want to call it. I'm just looking for key areas that the market clearly pushed from. And then I'm looking for the market to retrace back into that area. And I'm looking to long or short based on the bias. So it's pretty simple because I went from, needing a high time frame point of interest and a lower time frame break of structure, and then a couple other variables to now just where's the market going on the weekly and the daily. And then I'm going to use a 4-hour entry with that analysis, right? So I hope that didn't confuse you and I hope that makes sense, but let's just break down a little back testing session that I had here from the other day. And I want to explain to you each trade here. I took a break even here, then I took a win here, and then a win here. So yeah, this trade here I missed because I slept in, and this is when I was making the transition, so I wasn't fully committed. This happened I think last week, if I'm not mistaken. But this was a beautiful trade that I forecasted, and it was great to see it play out anyway. But now I kind of learned my lesson, and I'm a New York trader, right? So it's 3:20 p.m. for me. So now I notice with swing trades, I'll look at the market in Asia session and then see if there's any opportunities that I can set a pending on, and then London volume comes in, and then maybe New York carries it. But enough rambling for myself. I apologize, guys. I'm just pumped. I haven't done a video like this before, but when I talked about a couple minutes ago, I was talking about supply and demand zones. So for me, you can see we have this order block that I have highlighted to the left that was responsible for this big push, right? So I'm expecting the market to rally out of this region again. Now, is it going to push all the way up? Who knows? I'm not in control of that. But all I'm in control of is what the market does out of the area that I'm looking to enter, right? So because this is a daily order block, I'm now jumping to the 4-hour time frame to look for a break of structure, and then I'm looking to enter. So right here, this is that daily order block. You can see that we have a strong push above this high, above these highs, giving us a structure shift that also created an imbalance. And that's another thing. I need an imbalance because an imbalance shows aggression. It shows institutions are getting in there because we as retailers can't make candles like that. I don't know if you know that, but we are so small, such small fish in this sea. And when you do see aggressive moves like this, just know it's coming from an institutional level because there's no way as retailers we can do that. Retail traders, sorry. But this is an area here. This is the demand zone that I'm looking to enter in, because it was responsible for this push to the upside. So it's just about using the fractal nature. I'm bullish on the high time frame temporarily out of this order block, and then I'm looking on the 4-hour for my entry. This is a trade that I ended up going break even on because this is ugly, right? And this is not the momentum we want to see when we're looking for longs, right, Matt? Not the momentum we want to see. So I ended up going break even on this trade, and then all I'm doing is waiting for the market to shift again. And right here, you can see we swept liquidity here, taking out, well, I would have been stopped out on this trade. And then we had another break of structure to the upside. We come down, we have another break of structure to the upside. So we can clearly see right now that there is bullish momentum, right? And I'm I like to trade with structure, and that's something that I love trading the higher time frame for that reason, because I'm trading the high time frame trend, whether that be a pullback or the overall trend of the market. This entry here I missed on my backtesting session. This is what I would have loved to get in right away, but I clearly just fast forwarded a little bit too quick. But then we had another break above this area here, and then I just market executed in this order block. So just entering off of these demand zones, and you can see this one hit take profit, which was beautiful. I'm just going to remove these to make it a little bit more clear for you.
Yep.
This trade, the reason behind this trade, guys, is because on the daily time frame, you can see that the market pushed down very aggressive from this level, right? This is a big supply zone that was responsible for a big push to the downside. Now, I'm expecting the market to short out of here. Now, could I have had a limit on this? Yes, for sure, but I wanted to see confirmation, and that's what I use the 4-hour time frame for. So I have this area drawn out like so, and then I'm jumping to the 4-hour time frame, and I'm looking for a 4-hour break of structure out of this area, and that's exactly what happens. You could have entered here according to my strategy, but I thought this one was way more clear, because you can see this is clearly a nice bearish push out of this supply zone that was already responsible for this big bearish push, right? So we're just using the fractal nature, big bearish push on the daily, and then big push on the 4-hour with that trend. Then the market retraces up, and I would just set a pending on this area. And the reason I like the 4-hour time frame is because you have so much time to adjust and so much time to think, because say I didn't set a pending on this, I could have easily just market executed once we started to close like this, the candles, because candles like this don't represent bullish pressure. They represent fatigue, right? They represent weakness here. So this is a trade. I'm still in this trade, but the FX replay data hasn't caught up yet. So this will be my target down here at these lows, but I hope I kind of explain that to the best of my ability, guys. And it's just about using the high time frame direction. So like I said, one more time, the weekly and the daily, and then using the 4-hour to enter. And I'm just using these supply and demand zones, right? The areas that are responsible for the big push. It's a super easy strategy, and I find it has done me very well so far. I took a beautiful win today on AUD CAD that I talked about in my day in the life video. So if you guys are watching this, go check out my YouTube channel and you can see that video on there. But it was the exact same setup. Beautiful, beautiful trade following structure on the weekly and the daily, and then the 4-hour entry. So that was beautiful. And yeah, Matt, I hope that helps some people.
No, that was perfect, man. Thank you so much for the whole breakdown there. And I just had some questions going as you're going along. So just to really clarify it, so you talk about initially starting off by determining bias, and you say, hey, like this is going to be this position. I'm going to be looking for shorts because of X, Y, and Z because of my bias. Okay, so do you have a process in determining bias? And if so, what is that? Like, how do you go about doing that, and how could potentially people replicate that?
Yeah, no problem. So I'll show you. So it starts for me right away on the weekly time frame. That is the most important time frame for me in terms of my bias. And you know, the cool thing is, even if you're an intraday trader, if you're a day trader, I still think you should pay attention to what the weekly candle or where we are on the weekly, because it's super important. Because just for a second, when we look to the left on NZD CAD, you can see how nice, if you're just trading structure on the weekly time frame, it's very clear the market is bearish, right? So you're not going to want to be looking for longs up here when we're in a premium of this leg, right? You can see how well it trends, right? And over here to the left, structure on the high time frame is so key, because if you aren't aware of where you are and you don't have that bias on the weekly time frame, you can get caught on the wrong side of the market. And here's a prime example, right? Because this area right here was responsible for this move. And look what happens. The market trades back up into this region, and then we sell off again. And what does the market do again? Retraces back up in this region, sells off again. So to answer your question about what I do for bias, it's where are we on the weekly time frame? If we're within this weekly range from here to here, I'm okay looking for longs down here. But once we get up into premium of the range, once we get up to the high of the range, I'm going to be looking for shorts. But if we break structure, then I'll be looking for shorts or longs, depending on what bias I have, right? So but yeah, man, so it starts out on the weekly time frame. That's why I was looking for longs on the 4-hour time frame over here, because I was in a discount of this weekly range, right? But once we got up here, this is what I mean by paying attention to the high time frame. there were some people here that were looking for longs because they didn't have the high time frame analysis. They didn't know where we were on the weekly time frame. Or you know what, maybe they did and they're sticking to their trading plan 100%, but this is why this trade sold from this region, because we were in the structure point on the weekly, we were in a weekly supply, and we were just following that high time frame order flow and structure.
Yeah, I love that, man. I love that. And so on the higher time frame, you're primarily looking at structure and like premium and discount of certain ranges? And then are you also including like fair value gaps or any other points of interest in that analysis as well?
Yeah, so the criteria for the supply and demand zones that I use to enter on is, so this, for example, is a supply and demand zone. Supply zone, you can call it an order block. I just like to go with supply zones or demand zones. But anyway, it's the same concept. So what validates an area like this for me is this area had to have swept some sort of liquidity, which it did right here. It had to have had a big push that caused an imbalance, and it had to have broke some sort of structure. If it has that criteria, it swept liquidity, it caused an imbalance, and it broke structure, that is the criteria to me that, okay, this is a valid zone that I want to look to enter a trade on. And that same criteria I use for entries is the same criteria I use when I'm looking for high time frame interest, points of interest in general, right? Like if we look on the daily time frame here, that same criteria that I said, swept liquidity, caused an imbalance right here, nice imbalance, and caused a break of structure. Then on the 4-hour time frame, we're looking for the exact same thing, right? Swept liquidity, caused an imbalance, caused a break of structure. Then I'm looking to enter. So it's super simple, because think of how much more slow motion this is real time when you're trading the higher time frames now. You know, I was looking for this exact same criteria on the M1, and I know you are too, Matt. It's fast paced, man. Like if you were picking your nose or maybe you sneeze, you're missing out on that opportunity. You know what I mean? Now I can pick my nose as many times as I want. I'm good to go.
No, exactly. No, it's really cool. It's really cool to see. And I mean, all the fundamentals are there, right? You're still trading liquidity. You're still doing, waiting for premium to short and discount to go long. And those are like the fundamental principles, right? And it's just about finding a process that resonates with your personality and in the lifestyle that you want and all of that. So, no, I really love it. And so essentially, like if I were to summarize, it'd be like, okay, weekly, you're looking at your weekly and daily, let's say you're looking for your bias. So, and that's going to be based off of, again, the structure as well as premium and discount and other PD arrays, right? Like fair value gap, order block or supply demand. And then on the lower time frame, what you're looking for an entry, which is going to be your 4-hour, is going to be some sort of sweep on liquidity, some breakdown that has inefficiency, right? And then essentially you're just waiting for retracement back up into that block there, that the supply or order block or whatever, and then enter off of that. And do you target a specific risk to reward? Do you target liquidity pools? Like what is it that you do for a target?
Yeah, so I'll target the week high or the week low.
Okay.
So for example, this whole leg failed to break higher, so I'd be targeting this area down here. But I have risk management protocols that I started implementing where when I'm up 2%, I will roll my stop loss to 2%. So I will have a fixed stop loss that I'll roll into profit when I reach 2%. Because too many times when I had a 3% target, the market would come to 2% and then the market would come to 2%, then reverse and take me a break even or I'd lose. So just looking for my own data, 2%, like I always say, like punch me in the face if I'm mad about a 2% win on a day, you know what I mean? So that's what I do. And if it makes it to the final TP, then that's amazing. But my trade, for example, today on AUD CAD, I had a 3% target, but I think it was, what was today? PMI or PP?
I can't remember. I don't
know what news event it was, but I was up about 2.5 R and I had a 3 R target and I just rolled my stop to 2%. And, sure enough, news drove price down and I'm not sure what it's at now, but I don't care because I banked 2%. And
exactly.
The way I look at it, think of it this way. If you're up a certain percentage and say you're up, say you have a 4% target and you're up 3%. And this is something that I think is super valuable and you guys should really think about this. If you're up 3% and you have a 4% target, and you're like, okay, we're at an area that it could reverse from. Ask yourself if it's worth it. Is it worth you losing that whole 3% and it coming all the way back for just 1% more gain? You know what I mean? You have to think about it that way, because if you don't manage your risk accordingly, that 1 extra percent that you're trying to get, you could lose that 3% profit that you're already up, right? So that's kind of how I manage my trades now. And it's been great because, you know, there's times where, yeah, it'll take me out at 2% and then go to my TP. But there's also more times where if it does reverse at that 2% level, it's coming back and that's a break even or a lost trade.
No, it's so true, man. And I think like, I don't know when this happened, but it did seem to be more of like a social media type thing where we've just been so infatuated with like these high risk reward trades that like you just, and man, when you're in it and you see the numbers floating, it's really hard to tell yourself otherwise or convince yourself that you know there's that you can just take profit. Like it's okay, like you know what I mean, or you can roll your stops and you can manage it. And so it depends on what your plan is, but I'm a huge like advocate of just taking your partials and taking your like protecting your profits when you're at major liquidity pools, when you're in a main area of interest. Like it's just good to just shed off. Like even, you know, you can be incredibly profitable with 1R, like as your risk reward, right? Your average risk reward. So there's no need to, you know, try and aim for a million R. You protect what you have when it's in profit. You protect what you have, and you try and milk it. Like if it can keep running, you keep milking it, and that's what I love. What you do the rolling stops, and so as things are developing, you can keep rolling, and then the times that the thing is gunning and moving quick, I mean, you're milking it. You're catching a massive portion of it, right?
Yeah, like I had a trade. I think it was a couple months ago where I just did my rolling stop technique, and I ended up banking like 6% on that trade just from rolling stop.
Exactly, and that's a goal. Like 6% is a significant amount. I mean, if you're making that even relatively consistently, that's incredible, right?
For sure. And those instances are rare, but when they happen, it's nice. You know what I mean?
Absolutely.
And I'll be honest. It took me a while to be okay with 2% in a trade because I was so trapped in that SMC fallacy that you see on social media of the guys who were, you know, doing the 1 to 300,000s, you know what I mean?
Mm-hmm.
But yeah, I'm glad that I broke free of it. But yeah, I'll be honest, it took me a while. It took me a while to sit there and be happy with a 2% trade, which sounds crazy.
I know.
It sounds crazy now, but I'm just being honest with you guys. And it's helped me so much more. And another thing, one of my biggest goals for this year is to increase my win rate, because I find, for me personally, I'd rather have a little bit lower risk reward, but a higher win rate, especially with these funded accounts and larger capital. I don't want to be losing, 4 trades in a row to get that one crazy RR. You know what I mean?
Absolutely. Yeah, no. And that's honestly like, especially now, like I've told you, I've started trading futures, and I just passed the Top Step evaluation for the first time. And it was like my mentality with that, because the risk is so low, it's only 3%, right? Like for your max loss. And it's trailing. And so my ideal with that was just like, man, like, let's just take smaller risk reward trades, just get a higher win rate and just slowly build that up and pass. And like literally within a week it was passed, and it was 70% win rate, and 1.1R was my average, or 1.2R. And it was like, that's fine. Like, the results speak. It doesn't matter about the other stuff. The other stuff is just ego driven. If my results are speaking loud, then that's all that matters. If I'm getting paid, that's all that matters.
That's all that matters.
Yeah.
And I remember when you were telling me this, and it's great to see it, because I know we were both kind of in that, we were both in that mindset before, where we were both, thinking we needed to milk this for everything.
Yeah.
And it's cool to see us kind of go in on our own way now, and really forgetting, the social media expectations or the cool screenshots that you can have if the trade's a better RR, and just focused on like making money.
Exactly.
Got into the market. And I don't care if Timmy's talking crap online, because, he caught a 1 to 600 that day, and I caught a 1 to 2. Like,
exactly.
And fine at the end of the day.
Yeah. And especially now with funding, the opportunities with funding, it's like, 1 to 2 on $1 million account, like that's a significant amount. So it's like, and you don't need to, it's not like before where you just had your little $100 account and tried to flip it with, 10, 20% risk and, see how that goes. It's not like that anymore. You don't have to do that. you can rely on these other resources and get millions of dollars of funding and get 1% or 2% a month, and you're set. And that's literally a 1 hour trade, a 2 hour trade, and you're done. Right? Yep, that's
better every day, baby.
1% better, man. That's it. And that's what I would urge like anyone listening to do. Is just try and like take base hits, and eventually you get home. And if you're trying to swing for home runs, a lot of the time you're gonna strike out. And if you're just going for base hits, just they add up. So, and this is man, I love the strategy. I feel like this is something that's like that people can repeat. It's relatively new, trader friendly. Obviously you still have like, it's the confidence. You're confident in this now because you've been in the markets for so long. And that's something that, as simple as it looks, it's, can you pull the trigger when it comes down to it, when your setup is there? And that is what takes a long time to develop that confidence, right?
For sure. And holding the trade.
And holding it. Yeah, that's a mess of itself, right?
Yeah.
Especially on this time frame. Like, that's actually great that you bring that up. Did you find any kind of resistance in that from being like on the smaller time frame to then switching?
The only thing I would say at first is I spent a lot of time every like 10 minutes checking my trade. I'd be at the gym, check my trade. But then, I kind of got over that and I just set alerts. Or what you can do is check every hour to see the hourly close, or you can check every 4 hours to see what the 4 hour close is like. But I got used to it for sure.
Yeah.
Nothing stressed me out more than trading the M1 time frame, if I'm being honest. So I feel good now, I feel good. But yeah, like you said, like this is the thing with trading, right? Like someone can show you something and it looks very, very easy, but you still have to put the work in, you still have to back this, you still have to get your butt kicked in the live market and build that, as Goggins would say, callous your mind up. And, I feel like trading numbs you and you just become numb to it at the
It's so true.
Yeah. So yeah, the one downside to swing trading is you have to get over checking your phone all the time. Otherwise it can consume you. But there are so many pros to it that I highly suggest. If you're someone and maybe you're struggling intraday, definitely give it a try and see, because if you don't try it, you'll never know, right? And just because one way works for your favorite YouTuber doesn't mean you have to go replicate that, test it and find out if it works for you. And if it does, that's amazing. That's the one thing I love about trading is there's so many different ways to succeed at it, right? Like I've seen people with negative RR somehow be profitable. And, as long as they're making money, which is the name of the game, then you can't really talk crap about it,
Exactly. That's it. And I think it's just about determining what works for you and what your eyes see. Each of us see different things. Like I might be able to see a fair value gap and execute on it and feel confident on that. Whereas someone was like, man, I don't see it. I don't feel like they're working, and therefore they get no confidence from that. And at the end of the day, it's really all about confidence. That's what you're doing when you're going through these testing sessions, right? Is you're just building up enough data and confidence in yourself that, hey, when it comes down to it, I can execute on this. And what I'm seeing is lining up with actual results. And I think that's the beauty about with what we have here with FX Replay is like, man, you can go through iterations and iterations. Like for me personally, it's helped me out so incredibly over the past, however long it's been, 16 months now since the starting. And, that's the whole goal. And
it's crazy. I'm sorry to interrupt, but it's just, I wish we say this all the time, I wish we had this when we started out, because it would have helped so much. I would have lost way less money if this was around. But it's cool that it's around now. You know what Absolutely. I mean? And it's awesome because it's able to help experienced traders like us, and it's able to help new people as well. So it's the best platform, hands down. I want to get FX Replay tatted across my forehead.
Oh, that's awesome, man. Well, please don't do that, because you're already you're a handsome looking dude, so you don't want to mess that up with the old FX Replay logo. But awesome, man. Dude, thank you so much for joining. I don't know if there's anything else that you want to add, or maybe, let people know where they can find you. That would be
great. Yeah. First of all, thanks for having me. But you guys can check out _. That's my Instagram. You can go subscribe to me on YouTube. Just type in Mack Gray. And if you are interested in more depth in how I trade definitely check out rmtradinggroup.com. That's where I, teach people, and there's video on there where you can see every single thing that I teach, the topics, a look inside the Discord, everything. So you can justify if you want to pull trigger on that. As if no, you can just watch my free YouTube content. I have a ton of free YouTube content, but I just wanted to plug that in there for any.
Yeah, no, absolutely. And if you guys are curious, we'll leave a couple links in the description below. So go and check that out. But Macaroni, man, thank you so much for being here. Appreciate you so much, and excited to potentially help others adopt this trading style and practice and learn from it, and hopefully achieve some profitability and consistency.
Yeah, man, I appreciate you. I appreciate the FX Replay team. You guys are absolutely beauties, and thanks for allowing me on here. This is the first time I've ever done something like this, so thank you.
Yes, man.
If you watch this video, make sure to drop a like, comment, subscribe. Comment how good looking Matt is.
I don't know about that.
You made it to the end of the video. Comment Matt's good looking. Then we know.
Oh God. Well, I appreciate it, man.
I know you're all thinking.
Yeah. Get out of here. All right, dude. I'll catch you later, man. Appreciate you.
Love you, bro.
See you, bud.